Yeah, you see it says even upcoming. You see? Oh, nice, nice. Maybe the only thing is where it says upcoming, I'll probably put the number like up top here or something.
Yeah, but why isn't it going?
What's not going? Because you probably need to start it.
It's already started.
Start.
Oh, there we go.
Yeah. Is it working? Yeah. Okay. So probably put the number like up top here or something.
Yeah, but why isn't it going?
It is going.
Right. Yeah.
Shall I close the door? Is it possible maybe to like push the window a little bit? It's getting colder. Yeah, that'll do. Nice. Okay, nice sit. Okay.
All right.
Cool. After, what was that?
An
Hour and a half?
I'm still within time because I was thinking definitely it would take at least 2 hours to set up this whole thing.
Yeah, that was the plan. Yeah, true.
But yeah, good. Well, welcome to the first podcast of Stocks and Beers.
Yeah.
Cheers, mate.
Yeah, exactly.
Yeah.
We already started, but yeah, just the prep work was required.
It takes a long time. Yeah.
Yeah, true.
Yeah. So we can already discuss basically. So if you're new time watcher, my name is Robin, and I'm always joined
Not always, but yeah, quite
most of the
usually.
time
Yeah, most of the time.
by Kirill. Yeah, and we started this YouTube channel. Basically for our website that we made, 930.com. And
Yeah, it was more like, because shall we start from, let's say, the original story?
yeah, we can. Yeah.
Yeah, because another, let's say, of our partners in crime was supposed to come over, but I think he's hungover, so maybe he'll join us later. So I think we can just start from this. So the reason I think why we started all of that was like because we both Robin and I we liked, let's say, the investing part of things, and then we started to go deeper into value investing, right? And it was taking just pretty much very long time to get all the numbers out, and then just do your calculations in Excel and all of that stuff. So we were like, oh, maybe there's a way how we can automate all of that, just to make it all nice and smooth, and instead of taking it like, I don't know, an hour, half an hour,
Exactly. Yeah.
making it the minutes. And then so we made something like as a tool for ourselves,
Yeah.
which was, I mean, from then on, I was using that. You were using that all the time.
And it was fun because we started it first as just an Excel sheet where we basically would copy all the data, and then some numbers would flow out, and it looked similar to what we have today, but the whole process was manual. So we had a couple of income statements, free cash flow items, put it in there, and then we just discussed like, okay, is there a way to automate it? So looking up videos, and then we found a way to automate the whole sheet.
Yeah.
And then Kirill just went ham and just really made something out of that. That, like you said, that we use I use it almost on a daily basis. Whenever I need to reevaluate my positions, it's the first thing I grab. Or if I need to, if I want to buy some new positions, I start it up immediately. We have some other tools that we use to screen it first, and then we just check with our assumptions that we think are.
At some point, even like, for example, these other tools we have, so we have a couple of subscriptions as well, let's say, to do this, but we were like, at this point, I do not even use it anymore, because I just have, let's say, the whole list of companies I'm interested in, like business strategy-wise or business case-wise. I'm rarely actually checking something new, so it's just reevaluating, as you said.
Exactly, yeah, but also now in these times, it's difficult also to find good deals, right? So
yeah,
it's so it's more on the reevaluating side.
Yeah.
But yeah, so we started that I think almost a year ago, and then we were also thinking, okay, if we have this already and we love to use it, we might as well share it with the world, because it's easy to just share it these days. So yeah, that's also why at the end of every video that you see, we promote to go to the website, and then you can buy the sheet, which we'll show you later on.
Yeah.
But yeah, that will become a web app hopefully real soon.
Yeah. So we're currently that's why, for example, Anis and so the other partner of ours and I, we're literally like working around the clock because we have like our full-time jobs. Plus we're working on it, so right now we're busy with setting up the backend and the database, and the front end is already gradually coming somewhere. So we got some stuff. I'm not sure if we can share that, but I got some screenshots even. Maybe that's for later. But
Let's just see. Let's just discuss some finance first, and we'll
yeah,
dive
of
deeper.
course. I mean that's a whole idea. But,
Yeah.
but anyways, yeah. So it's actually interesting that something what was more just for fun and giggles, so to speak, we're like gradually working towards something bigger, hopefully. But
Yeah.
you never know.
For sure.
We'll see.
And even if not, so that's the whole point. Like, we were also considering like, okay, even if no one wants to buy this,
Nobody watches it, which is almost the case.
we are just happy to use it ourselves. Even so, the investments that we are making now to get the web app working is also for our own benefit, because we are advocates for our own tools. I've been reading, so especially where this tool comes in handy for me. So besides valuing new stocks or just reevaluating if I need to buy more of a certain stock, it's also for me to keep my sanity during high peaks and downfalls.
Yeah.
It's just a system to keep me on track of my own strategy, basically.
Yeah, makes sense.
So yeah, so if the stock drops 40%, then I just check, okay, but what is it worth? Then I can
It was the same with we almost managed to make a video about one of our common stock holding NM group. So that was one of the cases as well. Maybe we can either make a separate video out of it, or we can discuss it today. We'll see.
Yeah.
But that was one of the great examples.
Exactly. Yeah. Right. Shall we check out what's up in the news?
Yeah, sure.
We have some things that we put up to discuss today. Which in the title, of course, some Apple Vision Pro, Amazon. Also something interesting, also something we hold commonly, so we are a bit more invested in that, but Amex released their earnings.
It was good to see Amex, finally having some good comeback,
They have had record revenues the whole year, but the only thing why people were selling off American Express stocks was because they were building up the position where they have more cash on hand for defaults.
Yeah, just provisions,
Yeah.
But
which is still a worst case thing, right? Because it's still in the company. Of course, you don't use it for development, but then again, they don't develop their products a lot anyway.
No, it makes sense. But it's the same story with Visa, with MasterCard. They got some good results as well, but just because of the fact that people are still a bit cautious in terms of the future, how, let's say, the consumer spendings would be in the upcoming year. That's why people are still cautious. But then again, that's a great business. Everybody uses Visa. Everybody uses Amex.
Yeah.
It's not going to go anywhere. So.
Exactly. Yeah, it's been around for ages as well.
Yeah.
So that's fun. Also, there's some things that we could also look into. So you probably have heard the news about the incident with Boeing where the door flew out. So we can just check and.
That was the American. What was that? It was some American airline, right?
Exactly. Yeah.
Alaskan or something.
Probably.
Yeah.
They just took off and the door just flew out.
But it was also the similar issue with Boeing, right? So they had some problems with one of the models. They didn't pass some of the safety requirements and stuff. So they didn't give it a go in terms of going to production. So they also have some tough times.
Yeah, exactly.
Yeah. But if you want to show it, just do it on the other one. Huh?
Exactly. No, but I'm just already looking for some news.
Okay.
Because I don't think. Let's see. Of course, we can also just scroll down here to see what's what.
Yeah.
Okay, so Airline Access says Boeing needs to be held accountable.
Yeah.
We could look into it. So do we know what happened to Boeing here?
Let's just open up the news.
Boeing, Alaskan Airlines, Boeing.
Yeah, so it's that issue with 737 MAX, right?
was it the 737 Max again?
Well, if it's according to the news, huh?
Access to money to help them. Okay, but their share price has been.
Yeah, it's having some tough times.
Exactly.
Yeah, it's like since the COVID start, more or less, it's been like that for, yeah,
Exactly.
ever since pretty much. And I think for all of the airlines, it's like that. I mean, some of them say that like they had better performance and stuff. But then again, let's say in terms of the business model part of things, it just doesn't get any better. It's just the way how airline business works.
Yeah, but
It's
I
just-
mean, see for Airbus, for example, see this is just. This probably they have the opposite trend. So where Boeing is going down, maybe people park their cash in.
Yeah, but it's a duopoly, right?
Yeah, exactly.
I mean, if one of them goes bad, the other one's gotta be good. Otherwise, yeah, the whole industry is questionable.
But do we want to check out whether this is something interesting to maybe?
Sure, we can. Yeah, no problem.
Okay, so this is what we talked about, right? So this is our spreadsheet, and yeah, basically we can just check out what's going on. So BA.
Yeah, BA.
Okay, so we can already check here. Oof, so we see a lot of red.
Painted
So
on
a
red,
lot
huh?
of red.
Yeah.
Okay, we can just start how we always do it. So we see, for example, okay, so they do pay a quarterly dividend. Or what's the yield?
They are still even paying a dividend. I'm surprised. Oh,
Yeah.
no, they're not. Are they?
They are.
No, but it's red all
Yeah,
over the
it's,
place, really.
Anyway, just let's start having it. So revenue growth has been for quite some time. Revenue has been decreasing since. So between 2018, they lost like 40. What is that? 34 million more.
Yeah, but it's just almost half, right? So it was 180
Yeah.
billion to what is it, 66?
66.
It's
Yeah.
terrible. I don't know. I'm actually surprised, even though let's say you got all of these conflicts going on around the world, right? You know, you need a lot of these, let's say, flight infrastructure. You know, all the planes and all of that. Maybe even satellites and stuff. And Boeing is doing all of that.
Besides, they're also a military company, right?
Yeah.
So you have Lockheed Martin, which supplies jets.
Yeah.
I'm not sure what kind of jets Boeing actually makes.
At least they definitely provide maybe not the full flying solutions probably. I'm not sure, I'm not really experienced in that, but they definitely have defense sector.
So they have fighter and attack planes. Oh, the F-15. Okay, those type of
Yeah, beg your
F-15,
pardon,
F-7.
F-15 is like the most common.
iconic. Yeah.
Yeah.
Striking Eagle, F-18 also really no, but these are all planes. They have probably the F-22 Raptor as well then if they're sticking with the
Yeah, dude. Yeah.
terminology. So those are some quite.
That is very
d-
surprising then. Why?
And they also have a lot of missiles. It seems missiles. Yeah, so you would expect, especially with this turmoil in Ukraine, where US is supplying a lot of.
It's not only Ukraine. It's Israel. It's
Exactly,
Middle East,
yeah,
right? It's
and-
all over the place now.
You would see Raptor. Okay, so and then they partner up with Lockheed Martin, but yeah, you would expect not to see some kind of increase, although this is 2022, so that is the small increase maybe in revenue. I don't know. Well, I'm just curious for this year.
Maybe the year end will change. Yeah. But
Yeah, we can see the net income growth. You can see it over here. It's been negative. They have been doing losses since 2018.
but even to be honest, like I wouldn't even go any further than that. Really.
Just to check it out.
Yeah. I mean, it's a company which is too big to fail. Simply put, because it's like a, just basic infrastructure. Everybody needs to fly. Defense contracts are going to be
Yeah.
there regardless,
Yeah.
right?
Yeah,
So
yeah.
they will have to keep that company afloat.
Exactly.
But it doesn't necessarily mean that it's
Good
having it's a good company or it's gonna have like good prospects to grow. That's
Yeah.
the thing. So
I'm still curious though to what it says. Yeah, we can see that their long-term debt is really not covering their free cash flow is not covering their long-term debt, which would be also be fine, but I mean it's just really stretching it. They also dilute you a tiny bit though, and the dividend has been growing negatively, so not just really good things, no good signs to see. We can just check. So again, the research and development ratio is out of control, which I understand, right? Because it's just aerospace, basically, planes. So you need to have the investments.
Yeah, of course.
But it's just 2 times revenue.
It's very asset heavy business. It's
Yeah.
a very asset heavy business. And it's not only, let's say, okay, you would have McDonald's, for example, right? Okay, you would need the land, you would need, let's say, the machinery and stuff, and you would need people, but then at least the process is standard, right? And then here
Yeah.
you constantly gotta innovate. You constantly need to make better planes, let's say, better, I don't know, missiles in this case, or in business, Jesus, in the defense sector, for example, and all that stuff. So it's even worse than just your basic restaurant chain, let's say.
Yeah, it's true. Yeah, it's so that's something. So see, like I wouldn't normally, I would if I would see this, I would not continue at all.
Yeah.
But for the sake of the video, right, or at least for the stream. Okay, so depreciation. This also makes sense. They have a lot of machinery, planes, inventory.
Yeah.
It's not per se a bad thing, but you wouldn't want it to be this high. Setting a general expense ratio, that's pretty good. That it's at like below 20%. So but it's probably a lot of clients that they know. Ryanair, for example, the U.S. government. They don't need to have a lot of money invested to sell their planes.
And it's really hard to like just create a competitor from scratch, right? To make planes. So
Sure,
that's why you got Boeing and you got Airbus.
Yeah.
That's it. You don't need any marketing for that.
Yeah.
You know who to go to
Exactly.
if you need a plane.
Yeah. So these we already discussed. So yeah, a bit of dilution going on, and you can see also that they needed the cash flow, because in the good years they bought it back, and then in the bad years they just started diluting. Yeah, Funsmith, you wanna discuss these things? Cash conversion is swings between almost 500% and then minus 200%.
I mean, no offense, but let's put it like that again. Just coming back to square one. Let's say the whole purpose of this tool is screening. When I see a lot of red, I already smell that it's not a good deal. Or there's like something which is going on, which you can dig into, unless it's like a cigarette butt kind of company. Yeah. So it's like, okay, it's not doing very well, but you can get like these last puffs out of it, and then just go away with some other options. So I don't even want to talk about it, to be honest.
And just for reference, so what you were talking about was Graham's way of doing business. So mentor of Warren Buffett, and how Warren Buffett also invested in his early years, was looking for companies that were not doing that good, but they had a good value proposition basically. So they were cheap.
Yeah.
And then whenever they would have their last run, they would sell them off, and then that would be probably the end of whatever. And then Warren switched to basically, okay, buy and hold good companies forever.
Yeah.
And that's, I think, what we are also trying to do, is just to find those really good valued companies, and then buying when the prices are good, and then just either selling when it's overly evaluated, or just holding on to it. Yeah. Just let's see. For this, I don't want to really dive into other ways of checking their growth prospects, just by going just to Yahoo Finance. So you can go to Yahoo Finance and an analysis, and then it will give you the estimates of what the 139% growth in like per year.
But then that's also the case. Maybe they know something what we don't know, because I'm not knowledgeable in this industry at all.
That's true.
Yeah. So that's also one of the things, let's say, you should think about in terms of choice of the company. You should know and understand what you invest in. Otherwise, don't even go into it. Like, I don't know, if you are a gamer, right? You first, for example, you want to buy a keyboard, right? And you have some specific requirements about what kind of keyboard you want. So, do you want it clicky? Do you want it mechanical or whatever? Yeah. And you actually do the research, and you should do the same with your stocks. You should understand the business, you should understand the financials behind it, and you should understand, let's say, the growth aspects of the company. So if none of these are, let's say, close to you or understandable to you, then I would also say just skip it and go find something what's close to you, and that's it.
Yeah. Okay, so on average they didn't grow their free cash flow growth in the past 5 years. Revenue growth was minus 9%. So, and they are saying almost 150% increase.
Maybe again, that could be the reason for that. Could be that they place a bet on these conflicts.
Yeah, I think so. That would be.
But then again, like these guys upstairs probably know better in terms of how bad the situations are, right?
Yep.
And in terms of how what the demand would be, I have no clue.
But let's So what we then do? So let's just assume that next year, in my assumption, 5% increase, right?
Mm-hmm.
Just very conservative.
Sure.
So they do 140. Let's just say 140%. Even like 70% would be really stretching it, I think.
Let's do 30% a year.
Yeah.
Let's do something like that, and then we can just do the projection for like 5 years or something.
Exactly. So then 30%. What is the PE ratio? Probably also abysmal.
Yeah, for sure, for sure. Probably like in the ballpark of hundreds. You can go to the stock analysis.
Alright.
No, Microsoft. Yeah,
I got it.
exactly. Yeah. Oh yeah. By the way, we have 2 viewers, huh? So if you guys have any questions, because it's our like very first live stream, just let us know. I'm checking the chat in here as well on my phone, and Robin as well. So
yeah.
If you also want to know about some specific companies or whatever you want us to look into, yeah, feel free.
All right. Yeah. All right. So yeah, let's see. So they had a high. Okay, so this is also their good year, of 56 price per earnings, and then it was just 0.
Yeah,
so
because it's all negatives. Yeah.
Let's use just 60 and 0. It's gonna come out to 30. And
yeah, if miraculously they say like, okay, we're gonna have a great year with a lot of military contracts and stuff. Sure. Fine. Yeah.
60. 0. Just this just takes the average.
Sure.
Okay, so I'm gonna say this. Just repeating is always good. For the required rate of return, we always keep this, or at least we want to keep this above 10%, because if you normally would invest in some ETF or index funds, you would see some results of like 10%, 7 to 10% a year. You're taking more risk, stock picking, so you can do this 11%, 12%. It depends on how,
But we disrupted your.
Yeah, the train of thought was just lost. Yeah. Basically, how safe you want to play, and it will just adhere to that. But I keep this at 11, 12% normally. Just like I said, you're taking on more risk. Like with an ETF, it's just going with the market, whereas you're just taking this risk. The discount rate, we keep it at 11%, and for the margin of safety, this is something it differs per stock, it differs for your life. For example, I'm pretty young, right, and you're as well. So if we would lose a position of 10k, we have a lot of time to recoup those losses. Whereas, for example, when you're like 65 and you're losing also like 150, there's not a lot of time to recoup all those losses. So then you would also have like a more not as risky play as we would do. But again, I would probably put this higher margin of safety for Boeing.
Again,
it's
we do not understand the business.
Yeah.
We are very cautious in terms of their financials, and you just do not know what's going on within the company. So I would say, since this is like a black box approach to me, 30, 40, even maybe 50%.
Yeah, exactly.
Yeah.
Well, let's do 40%.
Sure.
And then, for 5 years would already be stretching. I mean, like you said, it's too big to fail though.
To be honest, 10 years even, that would suffice. Maybe even 20, because it's hard to sink this company.
Yeah. Alright, so the average valuation would be $160. So it's not that far off.
Yeah.
But if you would like to make some money on it, you would probably buy this around $96.
Makes sense. But then again, like it also depends on the revenue projections, revenue growth projections.
Exactly.
So,
And we'll see in February, March this year how that's going to be. Like you never have perfect information, so unless you really know the industry well and you know things that we don't.
Unless you're an insider as well, if you work within the industry and you know some of the stuff others don't know, which is your competitive advantage, let's say, you know, utilize it all the time. Like for example, I work in the, let's say, insurance banking industry in the Netherlands because we live in the Netherlands. So I know a little bit more about that versus maybe a person living like in US or elsewhere like in India, right? And you, for example, you work in the traveling industry, right, around Europe.
Yeah.
Let's say Robin knows way more about that than I do, so he might have different positions in this sector than I do because I have no clue about that. You know, so
exactly. So yeah, and it's also I've been reading One Up on Wall Street by Peter Lynch, and that's also what he states is that people are moving out of their comfort zone. So people in the oil industry will look up stocks in, for example, insurance, right? And the other way around goes for insurance, they will invest in oil, but it's of course better because you, when you're working with the stuff, information comes to you quicker. So that's something to keep in mind, and it's also you hear everyone saying like this is not a financial advice, which is it's not, of course, but we're just saying that constantly because you know things that we don't know. We don't have all information, and so our tool also doesn't have all information, and that's
It's rather about the process and just learning the how to do it, right? Because like you know all of these fun stuff happening, let's say with Robinhood, like during COVID times, you know, like all of these diamond hands and all of that stuff. It's fun and giggles, but then at the end when you see the stories on Reddit how people lose like thousands of dollars just because they, I don't know, gets into very shitty position.
Or they follow the herd. Like whenever when the short squeeze was happening and people were buying it, I wasn't one of those. At first I bought it and then I saw...
What happened to BlackBerry?
Dude, I don't want to talk about BlackBerry. So that's one of the positions I bought, and I just bought it for the hype, and I also quickly sold it off because I didn't understand how the whole short squeeze worked at that time. And then I sold it off because I saw it dropping. Later on, if I would have held it, then I would have made some profits. But the moral of the story is I had no clue what was going on, and I was just following the advice of others. Whereas if you would know what would have happened, you would have held BlackBerry, you wouldn't be scared, and then because these things didn't work on that case. Like if our tool would have been around there,
like, I felt like, sorry to interrupt, but it was more like a gambling kind of feeling, you know.
That is exactly what it was. And
and I was like, that's definitely not the way how you should invest. If you just wanna lose some money, you can go to a casino, right? But then you would have, let's say, I don't know, maybe a couple of $100 to spend on it.
Yeah, but in hindsight you would know because like Roaring Kitty did had some of those sources that we didn't have. So he could see that companies were buying a lot of short positions, and he knew they need to at one point start either buying those shorts or default on them. So if we have a lot of influx and we push up the price, then there's no way, and then the price will push it up itself.
But then again, the timing when he started, nobody was aboard. Was
exactly
right?
But
so I think there was also something you said, like you buy the rumors and you sell the news, right? Same thing. So when there are too many people are jumping on that thing, you better get the hell out of here.
It's already probably too late.
Yes, it's too late, exactly. So
alright, so before we move to the next topic,
next beer,
I was about to say
hey, you see.
Alright,
what do you got next?
We have two different ones.
We have this one I've never actually had.
You can have it. I had it one before. Yeah.
Okay. Did you like it though? Because blonde, I don't know.
Yeah, blonde's good.
Yeah. Because maybe I think it's Belgium though, right?
No, this is Dutch.
Oh, it's Dutch.
Yeah, it's okay. So we have for you. Let's see what camera is best. So we have the triple Carmelite. So this is actually from some company I used to hold as well. Up in Bev. Motherfuckers.
Also hurts, right?
I made some profits on it. It was just it was just a shitty company.
And then this one is Maximilici? I don't know. Is it?
Well, this is a microbrewery in the Netherlands.
Okay.
So these beers, these come around. I've only seen this around Kingston in the Netherlands.
Maybe. Okay.
So
because in Jumbo, like it's okay. Jumbo is like our local supermarket chain.
Yeah.
They have like a few of these, but I think they like come like and go like. I don't know, seasonality wise or something. They change the.
Yeah.
Yeah.
It's fun. Like where I live, here they have this microbrewery around the corner, and the Albertine has like a whole shelf just from the microbrewery. It's crazy.
That's what I like actually,
Yeah.
because like you can just go to regular supermarket and then you can just get some of these smaller like niche, let's say,
Yeah.
thins or whatever.
Yeah.
It's nice.
But it's
right?
fun if you go to other cities in the Netherlands,
Yeah.
you'll find other beers. So that's like
Fun, right?
that's amazing. Yeah. It's,
Like in
it's
The Hague,
great.
for example, like I live in The Hague and Robin is in Rotterdam, so we're also filming that in Rotterdam. There's also a brewery called Kompan, I think, right? That's
The Kompan is Rotterdam. It's from Rotterdam.
It's in Rotterdam.
Mm-hmm.
Or there was some other one. Anyways, in The Hague. But yeah, like exactly, like if you go to different cities, you will always have your local things,
Yeah.
which are like, I've never tried that, but that tastes fun. You know, I like it. Yeah. Can you put it somewhere?
Yeah, and there's also like it's good that they have still some independent breweries. Like the whole thing about Up InBev is they are the biggest brewer worldwide, but their whole business, or at least their marketing strategy, more or less, is not telling people that the microbreweries are not micro. So the same with Triple Carmine, you're like, oh, that's such a like old school beer, and then nope, it's just this huge company just pushing
but it
this
tastes
out.
good, I got it, man. It's like kicking. It's kicking
it's
your head right away, but
stuff.
it's also very sweet.
Exactly.
Yeah. So.
Oh, cheers.
Cool. So yeah.
All right. Is there something else we want to discuss? We can check the news again if you want.
Yes. Because shall we check Amex? Because I didn't check their news.
Oh yeah,
Just
sure.
curious.
Yeah.
Because Amex had a really great day yesterday, and I just wanna.
Yeah. So they dropped their financials. That's why.
I think what did they dropped their.
Yeah.
Yeah, because they had a Q4 release. Yeah. But I mean, what's exactly in there? I didn't check.
I just saw, like, I'm following the CEO of Amex.
I heard probably they also raised dividends, if I recall correctly. So that
What's
would
the
be
ticker?
Amex? AMX. AMX. I think.
AMX.
Yes.
American. Jesus Christ, no. Okay, there we go. AXP.
Oh, okay.
Yeah. So to disclose, we have positions in this company for quite some time. I think I bought it last year around this time.
You can check.
Either way, yeah. So if you have just been watching, basically, we already talked about this at the beginning. But yeah, it's a company that we both hold, and they have been pushing out record revenue numbers since I bought it, basically. Like every quarter was a record quarter when it came to revenues.
Yeah.
But every time they announced the financial statements, the price kept dropping, and as we discussed, that had to do with the fact that they also had provisions
The credit provisions, yeah.
for people, they planning on people defaulting,
Mm-hmm.
which given the economy is not a weird thing to do, and also something I don't think why people are stressing about, because then you would, if you would notice, right?
But that's interesting because you can see in the news that all of these big tech companies and whatever, they lay off a lot of people. Like I think Google announced another layoff.
Of recruiters.
Yeah, but then still, right? These kind of people would actually use Amex cards, right, for their business travels and stuff.
Yeah.
But then if you check like the Amex results, they're doing fine.
But that's
they
the
don't
whole.
have any troubles.
Yeah, that's the whole thing, because the whole business model. So where Amex is different to Visa, is that Visa actually wants their customers not to pay off the credit card because they get interest on those credit cards. But the American Express business model is they charge the stores, and they're saying, okay, cool, you're gonna charge a high number because American Express customers, they don't default, they pay off their credit card, they can pay, and they are high quality customers.
Yeah.
And you will also see that for high end stores, they always accept American Express cards,
Yeah.
and that's because they have high quality customers. So that's the reason why, and that's also what. That's also why you see, for example, that there is even though they don't have a lot of card holders, their revenue is higher than Visa and MasterCard, I think, combined.
I'm not sure about that because now when it gets to let's say the usage and stuff, Visa and Mastercard are way bigger. But let's check because wait. Yeah, you can actually pull up the sheet, huh? Just in the meantime.
But we were. I'll just put it in, and then we'll just.
So revenue, they had 59 billion. So it's like trailing. So at this moment, 2022 was 53 billion. And let's if we check Visa. Where's lovely Visa? Visa. Sir, you're actually right. The Visa is 33 billion, and a Mastercard is smaller than Visa. So I didn't even know that.
Yeah.
Okay.
So it's when you do your research.
Yeah, but I do the research. It's specific companies. I don't compare them with each other.
I was actually checked a video on this whole situation. On why American Express is outperforming Visa even though they have less cardholders.
Right.
And the reason is, like I said, they charge
their quality
the stores more.
Users, yeah.
So American Express CSO bullish on small business. 21 hours ago, MX claims most in users profit forecast tops estimates. Yeah. So the estimate was what per share. It was higher than the consensus earning per share, and that's also why the price increased. People are start buying, but then.
Can you check in the news like what the results are? Let's say of the just the snippet of the earnings. I'm just curious.
Jesus.
Yeah, that's bitter talking. Huh?
2 years ago. So for the fourth quarter, the company reported net income of 1.9 billion for $2.6 per share.
Just open it up. Should 60.5 billion in revenues.
Oh yeah, there we go.
Okay, that looks good. And I think there was also something about the dividends. They actually bought back some shares, as I could see.
Well, the company plans to increase quarterly dividend.
I will be very happy to see that.
Exactly.
Because that's what I also like. I actually increased my Visa position as well recently, because when it had the earnings release as well, it had good earnings, but it didn't have like any big movements in the stock. But they usually also increase their dividends by like 15%, like 10% yearly, like easy like that. So I was like, that's good. That's very good.
And it comes down to this: like they don't have a product to develop, and that's they can purchase cash on their shareholders.
So it's about payments. It's just about credit payments.
So let's check it out. So again, these are results from last year. But yeah, you can imagine if they have been having record revenue, it's gonna be good for when the year-end statements come in.
Yep.
So yeah, what do we see? We see quarterly dividend of 60 cents. So that's gonna the yield of 1.19%, and they want to increase this with 70%. So that's good news. It's not gonna. You're not gonna be able to live off the dividends after this one increase, but it's a good thing.
But that's also a matter of if the market is gonna get saturated, right? Then it's gonna be hard for them to find where to park that cash, right? Or how to, let's say, deliver value to shareholders. So it could be that let's say the dividend yield for Visa, Mastercard, Amex could go up to let's say 5%, 7% easily. Because it would just reach that saturation point when it's going to be just like a very too big to fail kind of company as well. Like a cash cow, let's say, type of company. So I wouldn't be surprised. I would be very looking forward to having this kind of company in my portfolio. Huh?
For sure. So yeah, we can just check it out. So we can see revenue growth, net income growth, free cash flow. So all the checks are there. They don't have that, at least something that they cannot cover. Share buybacks, really good to see again. You would want them to to decrease the pool of shares outstanding because it means that basic economics, whenever there is less supply, but demand is similar, prices will rise.
Yep.
So if they're just taking away the supply, then prices will increase, and that's the opposite, of course, true for if they dilute you. So if they're producing more shares, that also means that you're getting less value from the stock.
Or like simply put, you have a pizza, right? And if you have to divide it by 5 people, or you have to divide it by 4 people, right? With 4 people, you're gonna have a bigger piece of a pizza. Let's put it like that. So that's the same story.
Yeah. Okay, so we can just check out free cash flow growth immensely. Oh, like since 2018, it's almost almost tripled. It's crazy.
It's good. I was very happy on Friday, really.
And then you can see how everything is covered there. But this is what you want to see, right? So we just checked Boeing, which is a really good contrast to this company.
Yep.
A net earnings ratio, alright, it's not, you would like to see this around 20%, but it's not the worst thing if everything else is really good. So net earnings ratio, so from the revenue, their take home profit is 13%. Yeah.
What I'm also curious about, let's put it like that, maybe a little bit off topic, right? But for revenue part of things, Amex is very popular in like Western world, right? So in Europe, US, right? But it still has a lot of growth potential, like in Middle East, for example, in Asia probably, right? They most likely have, let's say, the local competitors and stuff. Like even in Russia, right? I'm originally from Russia, so I can say from experience that I do not really recall one of my friends would have, like, let's say, Amex cards for business purposes and stuff. So
yeah, I do over here, but not a lot. And there's still, I think, in the Netherlands as well. There's
okay, so they're in China. Can you pull up the whole?
Let me just check this. Most popular credit cards. Even in China, that's crazy.
Yeah, because Visa holds the biggest part of the. I think they hold 50% of the whole payment processing market.
Yeah. I'll just pull this up over here. Basically, what we can see here is that Forbes. What is your keyboard doing, man?
It's Razer. It's for gamers. So for financials.
Yeah, so here, so for growth potential, is there, what does American Express to offer? This is probably a fucking branded article, I can see it already. Let's see, how big is American Express network? Widely accepted domestically, of course, 90% of places in the US accept payments via credit card. Fine stores, retailers, US. Yeah, but so it gets tricky when you travel abroad. But you might have a little more difficulty finding places that accept your card. So that's what you're saying, right? So there's still a lot of potential for growth in this regard, especially if that's where the revenue is going.
That's my expectation, at least, yes. But then also the thing is, with payment processors, there's more and more, let's say, understanding that there's big reliance on Visa and MasterCard, which are American,
yeah, exactly.
right? And because of politics and stuff, local governments, they actually try to set up their own payment processors. Like, for example, in Europe, they try to fly Payconic. So this is, probably you've never heard of it, but it's like another payment processor. Within EU, they try to set it up. In Russia, they have their own one. And then again, actually, now, because of the whole politic things, this is actually helping them, because your whole, let's say, payment infrastructure did not stop, and it just still continues working with the local stuff. China has their own things. India, like the bigger economies, they start to actually rely on their local stuff. So there is probably some opportunity to grow, but let's say in a more peaceful environment, to my taste. So yeah, we'll just see, but that could be one of the opportunities.
But they're doing it because if they are having record revenue, and if we
Yeah, but that also could be because of even inflation things and just spending,
okay.
right? That's the thing.
That's also
Because if they would,
sense.
let's say, skyrocket let's say the revenue growth to, I don't know, maybe 15% or whatever, right? That's probably because of the economies apart from US. That makes sense because it would be hard to grow it within US by 15%, unless the inflation is above, let's say, 10%.
Yeah.
Or the interest rates are like 0 again, and then people will be just go on a shopping spree for everything.
Exactly. All right. Well, let's continue. So interest expense ratio 0. Would love to see this.
For a credit company, it's good to see an interesting ratio for 0.
R&D. So this is what I'm talking about, right? If you have a mode, if you have, you don't need to develop your product because people love it the way it is.
Yeah.
Same with Coke. They don't invest in the products, they invest in marketing, and the same probably holds for here. They don't even invest in the marketing. It's probably so marginal that it's not.
Yeah, but you also have to probably keep an eye on it. Like with, let's say, Nokia or BlackBerry, again, the examples, right? Everybody was like, yeah, these are the biggest players on the market and stuff, and then you got Apple. And then Apple took over. And then where's Nokia and where's BlackBerry?
But these are but that's differs per market, right? Because like for example, you want if Apple is good value, even though the R&D is high, and that's the only thing that's a red flag, then that's fine.
I mean, the fact is that, like, for example, if we don't spend a lot on R&D, it's good from the, let's say, the financials perspective, right? But then you also still gotta be ready as, like, let's say, the risk management part of things is that, that disruption. So somebody maybe like would create a credit payment system with cryptos.
Exactly, yeah.
Or with some other thing which is gonna be way better than Amex, right? And what's gonna happen with Amex? That might hurt, but that's also happening. Let's say with Visa or Mastercard, everybody's talking about crypto's just gonna take over. Do you pay with Bitcoin?
No.
Do you pay with Ethereum? Me neither. So that's why Visa and Mastercard are having breaking financial results.
It might still come, but I also think so. Yeah, okay. I'm not really that invested in the Bitcoin and crypto series in general. I still hold some, but it's. Yeah, I don't know. It was the whole hype, and then now some of the things that made crypto great, such as it's anonymous, those are also like fading away. So now it's like know your, what's like
KYC.
Yeah, KYC, know your customer.
Yeah, but then again, if you wanna buy crypto, like let's say the same Bitcoin, you go to Coinbase, and then what you gotta do? You provide your passport, or you show your ID. And what's the point?
Yeah, exactly. So it doesn't.
There's no point of this anymore.
It doesn't make sense. But what is good though is that like in the grand scheme of things, you don't really pay like the how's it called, like the transaction fees when you switch between currencies.
But then again, for example, there are other, let's say, tools which allow you to minimize the transaction costs of like paying between the currencies or between the countries and stuff. So it's like, let's say the crypto is not, let's say, the sole solution to that problem. Like for example, Wise, I'm not sure if you heard of that.
Yeah.
Like I literally have, let's say, a dollar account and a euro account, and I can put, I don't know, Japanese yen, yuan, whatever. Doesn't matter, and it's gonna be under still one European account.
Yeah.
And you can just move it around and stuff easily.
Exactly.
With inside the country, it's.
But what's behind like the blockchain? Of course, that makes sense. It's really cool, like to have like every step recorded. But I don't think if it works best with currencies. But I mean, only future and the time will tell. We don't know yet.
Yeah. But then again, it's also something what the governments would not really allow. Because if you are actually creating your own currency and then you put, let's say, the regulations on its circulation, so how much of these currencies are available, right? That's rather, let's say, the power of the country to issue more money or less money, and then just use it to your own liking.
Yeah.
If you need to, let's say, explode the budget, explode the spending. So it's a tough cookie to talk about.
Exactly.
Yeah, it's a tough one.
Either way, selling in general, as we talked about, they don't really put a lot of effort in their marketing. It's probably because the only time you really see MX is on airports.
Yeah.
Especially, like, I don't know how that is in the States, but
In
in the
hotels.
Netherlands, it's just they advertise heavily on airports. And as a marketer, I also know that these things cost money, but they're not costing 44 billion USD, let's say.
Yeah, no, for sure not.
Alright, so for the depreciation, it's still quite high, but probably because, why would this be? So is this just for their...
Depreciation is high.
Yeah, because they don't have things, right? So the cards, they have cards in their inventory, probably, but it's not, it's a piece of plastic.
No, but even that, I think Amex is not actually creating the cards themselves. So they probably just have a supplier for all that stuff. So
But would you say this depreciation comes from their offices then?
I think it also could be because of his provisions for credit losses and stuff.
Yeah.
It's just also a matter of how you account for them in the new financial statements.
That's true.
So I'm not sure if you would need to, for example, if you'd be curious to dig into this further, you can just open up, let's say, the financial statement and find it. So yeah.
Exactly. All right. But still, I mean, these and the net earnings ratios are the red flags. But besides, like, really strong fundamentals.
Yeah. But then again, even with net earnings, right? The reason why this could be low is just because of taxes. Simply put, they would rather maybe just spend that money elsewhere on buybacks, on dividend growths. Which is good to see.
So they're spending 2 billion on average on taxes, it seems.
It's quite some.
Yeah.
It's quite some.
Some more depreciation. Either way.
Depreciation in your capital.
So here the fund smith doesn't really work, and that's because of the industry.
Yeah, so this is also something with what we would work on better in the web app, is that mainly for the banking sector, these fund smith ratios are not, let's say, working properly or the way how they are intended to, just because of the nature of business. With more of the classic businesses like manufacturing, like services and this kind of stuff, that works perfectly fine. Like, for example, if we put up, I think with Boeing it was working fine, right? So let's say these classical business models, it's working right, but we know it, we're aware of it, we will be working on it.
So let's go to the valuation.
Yeah.
We see free cash flow growth in the past 5 years of 64%, which is crazy. We can check out what the analysts think about this. I can already tell you it's going to be very gloomy because at least rose colored.
Yeah, it's
Analyses 14%.
14%?
So per year for the next 5 years they expect 14%. And it's in line with what they were thinking last year.
Well, that's, I would say, good. 14% on the, let's say, the revenue of 60 billion already.
Yeah.
16 and a half. I don't mind that.
Should we stick? We can either go. So for next year they expect 10%.
Sure.
So let's go with 10.
Oh, fine.
So we think 10% rate. Okay, so we can look at their PE ratios. Again, these are all sources you can look into freely, right? So Microtrends and Stock Analysis do a good job of redisplaying.
And the good thing is we're gonna have this incorporated in our web app already, so we will not have to go elsewhere for this information in the future.
So it's less work from your perspective, and then.
Yeah, exactly. It's just gonna be one-stop shop for that. Yep, exactly.
Okay, so their highs are at 30, the lows at 12, it seems. Lower 11. So what, 30, 11.
Sure. So good. But it also kind of makes sense because it's already a well-established business, and probably people do not really expect it to grow so fast. Let's say.
Required rate of return again 11%. Discount rate 11%. March 30. I think we can put this a bit lower.
I would say 10%, even
Yeah.
0, to be honest. But then again, the reason why it is 10 or let's say 0 in my understanding is because we understand the business. We understand how it more or less works, right? On the business model level. If you do not know, you'd better just rise it up, like just increase it a little bit. So.
Exactly.
Yeah.
Would you say 10 years, or would you go even further?
10 years, yes. 20 years, I'm not sure. 10 years, probably yes.
Okay.
Yeah.
So what we get then is an average valuation of 208, which is
Okay.
close to its current selling price. So that means if you would like to have the returns that we just plugged in, the target buy price will be around 187.
I was buying it, I think, around 150.
Let's see, I can check out what my average.
Oh yeah.
Either way, but then there's also the question on, do you want to pay a premium for this kind of company?
Yes, that's for sure. And yeah, the answer could be different per person. Really.
Exactly, yeah.
So I got it. Yeah, I got it. Really, 151.
164.
It's maybe
But
we
let's
also
see,
got
but
lucky. You know, that's
I
also the thing.
think when we check this out in March, it's gonna be a different story.
Could be. But then again, like I've even increased my short on S&P a little bit. But this thing is still keep on like rising. Of course, there's like a lot of hype in it, but I'm just rather have like a backup a hedge really, because like if it's gonna go up, fine, it's okay. But if things are gonna hit the fan, then rather be ready.
All right. Let's step away from the business and the finances for a sec.
Sure.
So, who are you, Kirill? What do you do? Your day
Right now, I'm
life?
drinking beer. I'm very happy.
Exactly, me too.
Yeah, because it's been a long week. But you mean in general?
In general, yeah, just for the audience to know
Yeah.
a bit more about you.
Yeah, sure. I work in project management in the insurance company. So it's insurance banking financial company in the Netherlands. But my background was actually like more in like mobile payment security domain. So I was doing the project management there. So that's how I met our lovely Anis, who is our, let's say, technical person, who's not here, who probably had a fun night yesterday,
Exactly,
but, you know, maybe next time he's going to be here around but yeah, so I'm just doing project management mainly in spare time, doing 9:30 mainly, but apart from that, just stay sane, going to the gym, play a little bit of games from time to time when there's time, of course, but yeah, just it's getting very, very busy with 9:30, which is good, but yeah, it's hard when you're having like, you know, this kind of escalated side project.
That's the whole thing, yeah.
On your shoulders, yeah.
So let's see.
Yeah.
So we can see Anis here as well.
Yeah, at least there's a picture. At least there's a picture, guys. Yeah.
So
yeah.
the empty chair, just picture him.
Yeah. We could next time if he's not here, we'll just print it out. Yes. But we also have another person, but he's a developer. Excellent.
See, we have kind
We
of
have
room
another
service
supply
going
going
in.
But anyways, yeah. So we got like a team of 4 now because we also hired a developer. So he's actually actively working on developing the web app for us. So he's also part of the team. He's not on the website yet, but maybe in the future. You never know if he would be interested. But what about you, Mister?
Yeah, so I'm doing marketing mostly. Mostly.
For that good as well?
90% of my, 100% of my week is marketing. I'm working for a company in the Netherlands who just started out, and as you already mentioned, it's in the travel industry. So yeah, it's for a marketer always interesting and stressful to work for a new company, especially lately. But yeah, it's fun, and then of course we have the side project, so that's also where I can pull a lot of energy out of. So we have let's say weekly by weekly stock valuations, right?
Yeah.
Which is a lot of fun to do. So if this is the first time you're watching, we are actually doing these kind of stock valuations almost on a weekly basis. And you can also go into our older videos and check out if there are already some companies that you've seen. And of course, I see I see that there's one other person watching. So we're now dabbling in the low numbers. But either way, if you're watching, you can use the chat and let us know which company you would like us to value. Either way, yeah. So for 9:30, I used to do the website, but now we have someone way more capable than I am to build the web app and to work around that. Yeah, and in my spare time, I play a lot of video games, so I also understand that market. There's some photography and music involved, so yeah, that's basically my thing. And I read a lot of books.
Yeah,
So
that's what I
it's,
noticed. You're really into reading. Yeah.
Exactly, yeah. It's I also started reading fiction lately, so it
Okay.
used to be non-fiction only.
Yeah.
But fiction is good as well.
Okay.
But yeah, as I mentioned at the beginning, I'm now reading One Up on Wall Street by Peter Lynch, really good. And I think if he would do his next update, he might want to include our tool, because it's basically building. You know, he's talking about building a system and sticking to it, and I think that with our tool, that's something we can really.
Maybe we should reach out to the guy.
Yeah.
Maybe or somebody would reply to us like
Yeah, and I like beer. That's
I mean, that's clearly visible. We have quite a few in the fridge, so the night is young. It's not really night outside, so
Exactly.
yeah. But you're also way quicker with beers. That's what I also noticed.
Yeah, well, you're probably way quicker with vodka, so then there you go.
Sure, but that backfires quicker as well.
Yeah, it escalates quickly.
Yeah, for sure. For sure.
Yeah. Right. What is there something you want to discuss? Do you want to check the news? Do you want to just have some?
No, there was one thing I actually wanted to show you, but maybe we'll just have to swap seats. But there's like a couple of things. What are, like, let's say, I consider important when doing investing, and this is also something we'll have in our web app, is the macro.
Yeah. For
The
sure.
macroeconomics part and stuff, and we're also gonna have, let's say, a separate page dedicated to specific, let's say, factors within the macroeconomics of the biggest, let's say, countries. So let's say USA, China, European Union, so also including, let's say, Germany, Netherlands, of course, Netherlands, France. And then there's like a couple of additional factors which I actually discovered recently, maybe a couple of months ago. But it's actually quite interesting to look into, and they're like really simple. So if we could just swap real quick.
One second.
Yeah, that's important. The beer's
important.
Yeah.
It's in the title, Kirill.
Of course.
Let me just.
This is the sponsorship of our alcoholism. So, oh boy. So
It would be nice if
Yeah.
InBev is watching this, and then.
we can get the sponsorship. Heineken would do. So what was it called? So the first one is called Fear and Greed Index. So this one is very simple, but it's very cool tool. Let's say, okay, you guys should see the screen. So meaning, so there's this kind of index which counts, let's say, how expensive the stocks are. On S&P 500. So S&P is like the major US stocks, let's put it like that. And the higher the number is, the more expensive the stocks are. So when it says extreme greed, it means like what we just discussed, right? If everybody is like talking about stocks, I think what was it called, the cocktail party?
Cocktail party index.
That's the thing, that's exactly the thing. So the more people are talking about stocks, the more they buy, the more expensive they are. So it means you better just get the hell out of it. that just doesn't make sense, you know. And then when it's about, let's say, neutral or fear or even extreme fear, let's say timeline, then it's actually very good times to jump back onto it. So this is also something I'm checking from time to time, and this is probably also something we'll try to maybe incorporate in the tool, but it's a little bit hard because this is CNN specific thingy. But yeah, we'll see. So do you actually notice that?
As I told you at the beginning of the podcast, the deals are harder to find, and that's so that's also what you're talking about, the cocktail party, when everyone is jumping on the hype train of stocks or just placing their finances in the stock market in general. You always see these kind of things, and it works both ways, right? So there's one group of people who likes to sell off when people are buying, and the other way around, and that's actually how you should do business, right? But yeah, just coming back to it, it's difficult to find good valued companies. Also, when we looked at Amex just now, you would already buy at a premium, whereas when we bought maybe half a year ago, you would buy at a discount. So these things I take into account, but I don't really check the index, but I just notice it when I look at stocks and they are all overvalued.
Yeah, true.
And you're just steering away from it. You're like, okay, it's not gonna end pretty anytime soon. And because you know that there's economic turmoil, there are 2 wars going on, 3 even, right? Because there's also one in Yemen going on at the moment. So that's not good for business at all. The Ukraine war has had a major effect in 2022. We're not sure how Israel is affecting business yet because all the year-end statements need to come out, and then Yemen comes into the mix. We don't know what the future is going to hold. I don't know if you have seen the United Nations general from Sweden who's like, you need to prepare for war, World War III is coming. I'm not sure about those speculations. All I know is that there's also uncertainty in the market, and you really need to look hard for good valued businesses. And even then, when you're buying those, you're not guaranteed that they're gonna skyrocket anytime soon. So this is just all for the long term. Yeah, you can make 5, 10, 20% easy, but if you want to make those 10 beggars, then it's gonna be a waiting game. And of course, it's how it most of the time is. But especially now, it's hard to find deals.
Yeah, true. But then that's also the thing is, you at least you're checking the stock, let's say, on a regular basis, right? So that's why you can understand that, and then you are doing the evaluations, right? But this would be an easy tool if you are a complete newbie. If you, for example, just don't really understand about stock valuations per se, you can just jump on the website, just check it, and then if you just want to understand the overall pricing points, let's say if you go to a shop, right, even simply put, they do not have any price tags in that shop, but you just want to understand is that the fair value I'm paying for it, like the t-shirt or for some shoes or whatever, right? So that's just a good thing.
But also with this, I would like to see the data if they would have it in an Excel sheet, because you can you scroll down?
Yeah.
Because I think it's also seasonal, right?
So
this is what I'm talking about. So complete hype in December, and then it dies down in Jan. And I know this is it's not comparable to last year per se, but you can see this decline, and then from April onwards it goes up again. So what I'm trying to tell is everyone is buying on earnings. So people are just hoping that they're like, fuck, we're gonna buy now, Q4 earnings, MX, get on the fucking hype train, let's go. And then people might get disappointed later on, and then they're like, fuck, and then need to sell everything off.
Could be, could be, very much.
And you can see the seasonality. That's all I'm saying. So you're already expecting to be high accrete at the end of the year. So yeah, it's good to take into consideration.
I think it's even called Christmas rally or something like that.
Yeah, but and then it's also between May and September. It's just holidays.
People nobody's working.
Exactly.
So it's usually pretty chill. Yeah, that's true. Even from the institutional investors, right? So all these big bankers and stuff, they're just not. They're not working. They're simply not working.
Exactly. So and that's why you can see all the seasonality, people coming back and you can see it over here, people coming back start working there. What the fuck happened here? Like, yeah. So and it's just how it goes. And I think these shifts are. I don't know if we have data from more than a year ago, but it will be fun to see if this will go back 5 years. I bet you those trends would look very similar.
I would not be surprised either. Yeah, unless there's something like like these Black Fridays and this kind of Black Monday. You know, when there's a black swan coming in and there's something terrible happens. Yeah. But that's just.
So that's what we're saying. Like the tool that we produced is just to keep you sane, basically.
Yeah.
It's for you to check out like, okay, there's a lot of fucking hype in the market. Should I sell? Should I buy? You check this. You check our tool. It says, cool. It's worth X amount of money for your parameters, right? Not ours. Your parameters. And then that's it. Okay, I'm not touching that shit. Or you're touching that shit because you want to buy more. You want to sell it off.
Absolutely.
So these things are really interesting to have in need. Gives you another level of understanding of why some stocks are rising.
Yeah. Absolutely. Yeah. And speaking of the devil, so if you're talking about these bankers, you know, then when they have time off in summer, which makes sense. So that's why there's another, let's say, index, which is called Smart Money Index. Smart Money Index. I think here. This should be the link. Yes, exactly. This one is.
I've seen this one before. Like this is yeah.
Okay.
And so there's also a correlation rate. If you put it on 5 years, you can see.
Let me just try to maybe move it to the side because the people would also be able to. I'll go wait. Yeah. Okay. So the way how it works is also quite simple.
Anis.
If it comes back, yeah, lovely Anis. Just keeps on coming back. Wish he was around, but. So on top you got the S&P, right? Just the S&P chart, and on the bottom is the index. The lower the activity is, so if this let's say the smart money index around 0.17, it means you're not buying. So it means that everything is just very darn expensive, right? So if we, for example, put the 3-year overview, right? Yes, you can maybe even let's say 10-year. Yeah, just to make it simpler. So when it's all-time high,
people are not buying.
Yeah, so as you see, it's 0.5. It's rather low, right? But as soon as it's getting low, the activity gets high.
But this is so what I just told you. The principle of when people are selling, you're buying.
Yes.
That's smart money.
Exactly.
That's the whole thing. Like when COVID, when shit hit the fan with COVID, the only thing I was thinking about, shit, everything is on sale, and I just started buying it like crazy. Not to say that I'm smart money because I am still an amateur when it comes to stock investing, considering my experience.
Yeah.
But these are the patterns that you want to follow, right? You want to see what are the funds doing, what are the equity manager doing, because in the end they own everything.
They move the markets. They just move the markets. They have a lot of volume. They got a lot of activity in there, and you just gotta follow what they're doing. Otherwise, you're gonna. I think there was a saying from Warren Buffett. When the tide comes out, you will be able to see who was swimming without shorts or with, you know. So you gotta be careful, you know.
Exactly.
And that's what also important to see. For example, right now, the activity is merely very low. So you can see it's like at 0.33. So it's as low as it was, let's say, in so was it June? I think June last year. So it's very low. So it means that like just get the hell out of it. Just get the hell out of it. It's expensive. Don't do anything unless you just want to short the market. But then again, shorting the market is something also not for everyone, and you also gotta understand it's quite tricky. And then you can also have leverage and yada yada yada. So
since I've been reading Peter Lynch's book, it's just see this. I'm gonna probably bring it up during this whole podcast a couple of times because this is the thing I'm reading now. But then he also mentioned like everyone is telling like I predicted the crash, but then these people weren't holding shit, you know, and or they didn't tell me, and it's just really difficult to predict. And for example, with the Big Short, when you really understand the mechanics behind it, like fuck, this is bad, you know, and then okay, that's something different. But
Yeah.
you don't have all the information unless you're BlackRock, Vanguard, and you own a lot of these companies and a majority stake as well, and you have all that information. Like, okay, this company's doing poor, this company's doing poor, and you combine all those pieces, and you're like, okay, it's time to do something different.
Yeah.
But for the average Joe, for me and for you, it's shorting is something. It's a strike of luck basically, and it makes sense to hedge like you're doing, and
Yeah.
also what I'm doing, like shorting the S&P. But you don't know when to sell off, because you can also miss out on people still being hyped. You don't know what's gonna happen in January when all the stocks are having revenue like record highs for some reason, and then you're just there with your shorts out,
Yep.
and then it's fucked. And
But that's the thing. When it's, let's say, the movie, right, The Big Short, what we were doing, we were pretty much just making the positions on the short-term notice, right? What you understand is that, let's say, the growth, it goes in waves, right? So there's a peak, but then there's also a downturn, like, which is also quite rapid, right? So what you gotta understand is that both of these phases come and go. The only thing is you do not know when. But you just gotta be prepared for both, right? So
Yeah.
if you are, let's say for example, preparing for the downside, you either A, short, or B, just hold cash,
Yeah.
right? In order to buy out some more, right? If you for example, preparing for, the sky high, let's go to the moon kind of situation, just keep on buying something, right? Whatever you feel like. But then again, you gotta be prepared for both scenarios. And like this, one of the things which also helps you to understand. So let's say the fear and greed means that everything is expensive, and this one, let's say the smart money index just supports the fact that, okay, if these guys are actually jumping on the train, then it's definitely gonna go into, let's say, the high rise part of things. So yeah.
Yeah, what you can see over the year.
Mm-hmm.
So there's
So
a
as well, because
there's
I think I'm done.
okay. There's a lot of greed. Yeah, I need to take a leak in a bit.
Yeah.
But there's a lot of greed.
Yeah.
This doesn't go as far as now.
Uh-huh.
But there's a decline in what smart money is doing.
Yeah. They're just
So it's and
chilling.
people always get caught up with their pants down whenever this shit happens. So it's a matter of your risk tolerance, which markets you're investing in, and
You can jump on things even with leverage, but then again, your shorts can come off even quicker
exactly.
in a matter of seconds even. So, shall I take over for now?
Yeah,
And then,
let's do a quick pause for like a minute or two. And then
Yeah. I'll try to take over or something because All right. So we got 2 viewers. I'm not even sure if you guys are real, but it would be nice if you wanna ask some questions or whatever. It would be fun. Would be even fun to see your feedback, if you like it or not, because we're just starting, and it's just like more like a journey for us, a learning curve, just to, let's say, to do something what we like and trying to make it something bigger, out of what it currently is, because it would be like very fun just to do what we're doing, but like, on as your full time, not even employment, but as your gig, I would say, because it's not like work, because at work you just gotta do what you gotta do for work, and this is just something what we actually enjoy, what we like doing. So so let us know in the comments. You two guys, you are amazing, and thank you for watching it. Because you are just probably witnessing something fun. Hopefully what's gonna, hopefully grow in the future. And you're quick. Holy moly. Supersonic speed, eh?
Easy.
Yeah. Take your lovely seat. It's all yours again?
Thank you.
Oh yeah,
Alright. Something you want to discuss?
To be honest.
Okay, let's see. What's is there something that's gonna be popular for the time of year? Like spring is around the corner.
Yeah, what's coming up, huh? Yeah.
So Dairy Queen is on ice creams.
I actually, I forgot about it, because this is actually in our title, the Amazon and Google. I wanted to check those.
Dude, no, I wanna. Sorry, but
Yeah, of course.
I'm gonna overrule.
Have
you seen?
You're the big boy here, so you can do that.
Have you seen the fucking the Apple Vision Pro lately? Dude, they're marketing that.
But it's probably expensive as heck, right?
It's
like 3,000 or something. I heard. No, it was very expensive.
Okay, that I need to check out. Let's see what the. Hold on 1 second. Anis has been in picture for a long time. Even though he's not here, he's here.
He's in our hearts. In our hearts and in our souls.
Okay, so let's see. It's gonna be a gazillion bucks. So why this is interesting, right? Yeah, like, or $300 a month. $300 a month
for a VR headset. How much is the Meta? What was it? Quest?
Like they sell it at
like a few hundred.
below 1,000.
Yeah,
but it's a
sure.
different cookie, and you know also it's Apple. I mean, look at their phones, like, right? It's like
Okay.
what's the
Sure.
latest phone?
I have no clue.
Me neither, but
because we're Android boys.
exactly. Anyways, it's fun to check it out. There's been this huge marketing push on the on this product, the Vision Pro.
Why would you even sell a subscription for this?
Because it's too fucking expensive.
So it's not even a subscription. It's like rather a loan kind of thing.
So basically, you're paying it off.
Yeah, so it's a loan.
Yeah. But still, like, what, dude? Like, for almost $300 a month, you know how good it will be to invest. $300 a month if you invest that correctly.
Yeah.
Dude, like, why would you waste that on this thing?
I mean, unless you are like a professional in whatever, and I
Who the fuck needs which professional is gonna use a?
Yeah. That's why I don't understand. Like, why would you use a VR headset for $300 a month, and that still would be making a great value for you?
No.
I don't understand. I have no clue.
This is also like, but Apple can pull this off, so that's also why. No, fuck you. No, Jesus Christ, I don't want to do this. Either way, it's expensive as heck. Who the fuck are you? I don't want. Never mind. No. Either way, the beer's kicking in, boys.
Yeah, now it's more like a beer talking now.
Jesus. Dude, if you want to have that 1 terabyte option, okay, let's just.
Why? What? Why there's even options for the hard drive? What the hell?
I'm just really amazed that they are able to. Okay, then.
This is disgusting. Because you know how, for example, these like Meta's Quest work. You just plug into your computer, and they work just as goggles.
Holy shit, dude! Dude, this is okay.
What?
This is fucking dope.
Okay.
Do you know the brand Zeiss?
Zeiss?
They make
the
lenses
glasses.
for glasses.
Yeah.
Okay, so you can have your your just regular glasses for an additional $100 for reading glasses on your fucking.
Per month or what?
On just on the.
Okay, that's already good. Not per month,
Okay, but then for prescription Zeiss glasses, I think this is really cool.
So
you can
like
predict.
prescriptions.
You can put them in, so that's really cool. So you don't have to wear glasses. That's
you know what you can get? Listen, what you can get? You can just put in your contacts and then just have your VR headset. Huh? Oh my god.
Storage space. So this will increase slightly, right? Marginally, $400 for 4 times as much storage. So that's decent.
Just close the webpage already.
No,
it just looks disgusting.
I'm just looking at it.
It's just disgusting.
Either way, this is just gonna sell because it's Apple.
No, it's not gonna sell.
This is gonna sell.
No, because it's gonna be the same as these iMacs Pro, whatever the hell, where the wheels for the PC, the PC, the box was all the inside. The wheels were costing like I don't know $100.
Okay, but this is different. So this is the hardware, dude. They charge $1,500 for a stand. They charge $1,500 for a Pro stand. But this is different. This is an extra product. Like, people are gonna, honestly, they're gonna buy it. I swear to God.
Okay, the people who have Amex cards probably would.
People
But
who don't
yeah,
have
sure.
MX cards are gonna buy this with the fucking $300 a month.
Okay, this is something we're gonna check in a year because
Exactly.
that would be very curious. Because
Either way.
No way.
I thought it was fun to check it out because like now we're getting into the sphere of VR. So there are a couple of players, right? You have Meta. Microsoft's also dabbling their foot into it because they want to have their teams online.
What was it? HTC, I think. Live.
The Vive, yeah, I haven't heard anything about that in past.
No, but then again, this is more like for the gamers. If you play VR, like games and stuff. But then again, this is so raw as well. Like when it gets to at least the gaming department, right? It's still not so big because I don't know what it is easier for you. You have a PlayStation, just to sit and relax with your gamepad and just chill, or stand up, have your VR, and just have to move around.
Dude,
and walk
even
and
if for PlayStation, there's also a cheap alternative of like $400 where you can buy the VR and you can do both.
Yeah.
So, but the thing is like, so what is the added value? So I'm just trying to understand why there's, if you know that the competition is selling for $500, why are you selling for $3,500? So this is the thing that I don't
Just
understand.
Just a brand. I feel like it.
It is,
Because
you're
there's
paying
now
for Apple.
Yeah.
But have you seen this marketing video?
No, but I
This-
listen. I see the webpage. I already see it looks nice and all that stuff.
Yeah.
But then again, this is not targeted at us. We'll not be able to, let's say, pay this price. Even if we would be willing to.
Yeah.
Like, I don't know, like, okay, you can just get a loan of $300 a month just to pay out this thing. But it just doesn't make sense.
Yeah.
Like, what would you use it for?
That's the thing. So for now it's very basic, right? So they showed in their promotional videos, so you can check your photos, you can browse the web, and the thing is also, transparent, so you can see your eyes. You can that makes for me makes total sense that they're going that path that you can still see your facial expressions. So with a VR glass, you're very dislocated from reality. So when you're putting on the VR glass, you're just not seeing it. But I also know from my own experience that there are these augmented reality glasses, which is basically is right. It's not VRs, it's AR for 10% of the price, maybe even 5%. I'm willing to tell you that if you have an Android device, you can buy this for 5% of the price. Similar glasses.
I don't know, mate. It's just, let's put it like that, this is not my cup of tea or coffee or whatever.
But what I'm curious about is because this speculation about the success of this headset is already priced in probably, right? Because they announced this half a year ago. So I want to see, because I don't think we have ever done Apple evaluation.
We did. For the videos, I think we did.
I don't think so. But we can check.
You can always check. That's why you guys can always come on our YouTube channel.
Exactly.
We would really appreciate it.
So we did Rockstar Games. Apple.
Yeah, that's our first one.
5 months ago.
Yeah,
But
of course.
but
No,
let's see how that changed. Because we
Sure.
can check it out. We can check it out real quick.
Okay.
So not any sound, but let's just see what we said. What was the price?
Oh, it's so fun to see how it was in the beginning.
Yeah, we upgraded, man. Already in 5 months' time, it's the production value went up.
Yeah, well, hopefully. At least the mics got better.
So we said the target buy if you want. Okay, so with the following assumptions.
Yeah.
9% annual growth.
Yeah.
35 PE high,
Yeah.
12 low.
Yeah.
12% required rate of return, 12% discount rate, and 20% margin of safety. Okay, so let's see what happened in the meantime. So this has been like half a year ago, and I think this was before they even announced their. So when did they announce it? Let's just check. When did Apple? June. So was probably around the time.
It wasn't summer when we started, right?
True.
You can check.
We're gonna check it out. AAPL. There we go. So here we can see the green checks again. So that's probably also because we know that Warren, for example, holds Apple stock.
Yeah.
And if you just screen it for the basic fundamentals, you understand why. They are very aggressive on their share buybacks. They can easily pay off their long-term debt. They grow everything from revenue, net income to free cash flow, and they even pay a dividend these days. So the dividend yield is 0.5% per share.
Yeah, that's just
Peanuts.
yeah, pocket change.
But then these things are really fucking good, right? So net earnings ratio above 30%. You want to see that?
Yeah.
Interest expense below 5, really good. Research and development, even though they're a tech company, they are managing to keep this below 20%, which I think is impressive.
Yeah, but this is just the way how they do it. So they make good products, but just because of the brand, they have such a good markup on it
Yeah.
that these, let's say R&D, are easily covered.
Yeah.
That's the thing. That's the only thing.
Yeah.
But then the question is for how long they will be able to, let's say, continue riding that train of, let's say, credibility of your brand. That's also the thing, because let's say in China, they got their local stuff, which is actually even getting more popular than Apple.
When I was in China, it's
Oh, yeah, you actually know. You can say from the first-hand experience. Yeah.
it's I would say it's as huge as their own market. They like to buy foreign products. So Starbucks they have their own coffee chain,
Yep.
but Starbucks is always busier, and the same goes. Okay, so this was like 4 years ago now when I was there, and I was there for quite some time. But all the popular kids at school and all people who had money, and I was in a city where money wasn't tight at all. And everyone had Apple products, and I know that they had a shit ton of Apple stores. They also had like Xiaomi and whatever Chinese brands they had, but there's a different aspect on their domestic products and their foreign products, and it depends just where you are. And of course, in the grand scheme of things, always the Chinese brands, for example, they win. When it comes to manufacturing, it doesn't matter. So that's the thing. It doesn't matter whether they produce it or they sell it, because they're always winning, right? Because even though Apple is performing really good, the Chinese are also having a big stake in it because they are producing these ones. But yeah, either ways, yeah. I don't think it's just. I would say it was very similar to being in Europe when it came to like phone distribution.
Yeah, because at least let's say what probably changed now is the trade wars, right? Because what they impose now is that tech companies are not allowed to deal with China, and then they, for example, even created their own OS recently. I think it was Huawei. They created their own operating system.
Yeah, but they have to.
Of course, but then that's the thing. It's like it's just the trends are not about the globalization when people are like actually jointly working together, but it's more like, okay, you got your own business, we mind our own business. Let's separate, and it's no bueno. It's not good development. So that's why it's just, even like for example, there were news a few months ago that China stopped purchasing iPhones for its governmental spendings. So they completely are gonna fully rely on their local stuff, like all their local companies who build phones. So and that's a hell of a big market. Even let's say the governmental spending. So
Everyone's in the government there.
Yeah. So
yeah.
It's just
When it comes to marketing, and I think that this would speak for not speak for itself. So I have some credibility in talking about this, but Apple only releases a couple of advertisements a year, and they are very high impact. They are not pushing for any call to actions. It's just, this is our shit, buy it. And if the thing that they've been pushing now was just a conversation between the product manager of the Vision Pro and some random dude. Either way, they know how to make the bang of the buck when it comes to selling a general expense. So meaning they don't need a lot of spending in this area to really market, and that's also the thing what you're saying, that they're relying on the brand, because some of these people are just so focused on vision on Apple, like whatever they do is good, so it doesn't matter what they're communicating, they will buy it anyways. Depreciation makes sense, it's really low, so that's something interesting for me to see, because they do have inventory, but they also know how to move their products efficiently, and that's also probably because of their fan base. So these we already discussed. Can you tell me more about the fund split ratios, Kirill?
If I could see. But I think for the last few years, some of the numbers were not there or were not calculated. But it's at least, let's put it like that, generically speaking, it's important for you to follow, I would say, the first three things. So return on capital employed, meaning how much money the company puts in the business and how much money the company gets out of it, right? And of course, Apple, with their margins, will be doing great about it. The only thing is, for example, if they spend more money nowadays in terms of, let's say, relocating its production, because, you know, the situation with Taiwan and China, they, I think, start to gradually move towards, let's say, suppliers in Vietnam, India, etc. So they could be probably spending the money there, at least for now. But then you also need to know more about, let's say, the gross profit margin and the operating margin. And when it gets to that, Apple is doing pretty great. So it's, if I can check, so for gross profit margin, it's about 40%. So it's all right, especially for, let's say, the rather technical hardware plus software business, right? It's okay. It's rather tolerable. And then plus, if you consider the fact that the company is actually making more revenues now from the services, that means, yeah, could be better. It could be better, but I mean, it's one of the best companies out there when it gets to, let's say, the mobile related things, like everything. So it's mobile. You got the PCs and you got the additional accessories and stuff, right?
But
so
that's, the thing that they're selling is their ecosystem.
Exactly, ecosystem. But now they are getting quite greedy because they understand that they cannot spend too much money, let's say, in the hardware part, so they're selling more?
Yeah.
So they're actually trying to sell more of the asset-light components, services, software, etc. Exactly, yeah. And this is, let's say, the proper development for the company if they're trying to still squeeze out every single buck from their customer. Fair, but for how long it would be tolerable?
Oh, that's the thing, that you're trapping them into, like, you're trapping your customer into system, because you're using Apple Calendar, you're using Apple Pay. If you have an iPhone and you have a MacBook, it works together like one device.
Yeah.
I know this from experience. If you're stepping away from one or the other, it's making things harder on you, and people generally don't want things to be more difficult than it already is.
That's what I actually also noticed with Samsung, because I have, like, my phone and tablet are Samsung, and for example, I want to take notes, right? Like, with my tablet, I can also just take a pen and just write it, and they had a software on Windows where you would be able to see your notes and just do whatever you want, right? Similar ecosystem with Apple. But now what we introduced is that you can only have this software on your Windows laptop if it's from Samsung. So you cannot, for example, what I have is, I have a laptop from Razer. I'm not able to download that anymore. Unless I'm just doing, like, you know, all of these manipulations, which are, like, well, quite painful, let's say. And as an average Joe, you're not going to be doing that. And that's annoying.
Yeah.
That's very annoying. And then Microsoft is also doing that, but they are very kind of, let's say, lost. They are not very familiar of how to set up all of these environment properly yet, but they're also gradually working towards it. So it's not very good for the consumer, I would say. You know?
It's these things are basically captive business models. So the same goes with your razor blades, right? If you have a Gillette razor blade, it accepts Gillette razors, but none other, and it's gonna be the same with PCs.
Yeah.
So it's so I'm not worried that Apple won't sustain this kind of margins because they're just gonna develop more products that only their users can use.
They just really ramped up in terms of switching costs. Because imagine if you would be an Apple user with your whole ecosystem and stuff, right? And then you would decide to, let's say, transfer somewhere else, right? To another provider or whatever, or to Samsung. Yeah, good luck with, trying to transfer all your notes and everything, like, to some other products and services, So this is good from the business model perspective, but it's very, again, annoying from the user perspective.
Exactly. But yeah, it works for them. That's how they are able to keep their.
It does, but yeah.
All right. Well, let's see. Okay, I'm just gonna ask you a question to make this prediction.
Yeah.
How much do you think the analysts are gonna say Apple's gonna grow?
If it's gonna be more than 10% in the upcoming 5 years, no, okay, per year.
Mm-hmm.
I'm gonna be disappointed, rather. Not even surprised, but disappointed.
In Apple or in the?
In the Apple list. No, in Apple I would be like, okay, if they manage to pull that out, okay, good for them, but...
5%.
Thank you. No, that makes sense. But it's better just to calm that hype down a little bit, really. It's just getting ridiculous.
So let's say 6%. They have been growing in the past 5 years. They've been growing their cash flow by 15. So like 10% would be my max.
But you see, that's also the problem, because Apple is everywhere globally. It's like Coke, right? Everybody knows Coke, everybody knows Apple, yeah? And it's hard for you to grow, let's say, the revenue part of things in terms of presence globally, right? So you just gotta only squeeze out, let's say, the money from the existing customers for services, for additional products like that VR headset thingy, right? And for how long is it gonna last for?
I think these people are very creative.
Yeah, well, I mean, it's good for them, but maybe I'm just a little bit of an Apple hater, especially after a couple of years. But
let's say, shall we say 7%?
Sure, if you wanna make it like a rainbow and unicorn kind of.
Okay, then we do 5%. I was just thinking, like, the inflation has been so crazy. Let's say they just keep up with that.
It's not about inflation. It's about just having the ability to sell more, okay, at increased prices, but then again, having troubles, like politically speaking. Because China probably is not going to be selling as many iPhones as it was, let's say, 4 years ago. 4 years ago was great times, apparently, huh?
No. Yeah. Well, not for Lock and Coffee. But that's a
Okay,
story we can talk about later. Either way. Okay, so we'll just do 5 then. 5%. When we're looking at their PE ratio, we can just look for AAPL. PE, oh, there it is. Jesus. So the high of 35. See, and the thing is, like, though, it's not that crazy as we've seen with other stocks when it comes to price to earnings ratios of stocks. It's not out of the water, like.
Oh wait, what's?
I guess 35.
Well, I mean, it's okay. Let's put it like that. Yeah, because if we check, let's say, I don't know, Netflix and whatever.
Yeah,
it's different story.
Okay. 35 and 12.
Sounds like Amex. I think for Amex it was the same.
Okay, so what do you want to say with when it comes to, like, the margin of safety?
Wait, I think you press something now. Yeah, okay, you press something.
Okay, there we go.
Yeah, and if you just do the same.
Yeah.
That's what happens when you have a spreadsheet instead of a proper software to minimize this problem.
So, wait, the high was 30, but it was low.
Yeah, 30 and 12.
12, yeah.
Yeah.
So these we keep the same. Margin of safety. So, okay, you're saying there's a lot of uncertainty when it comes to like foreign markets.
There is uncertainty in terms of the revenue growth, right?
Yeah.
When it gets to, let's say, how solid the business is, I would say it's quite solid, just because of his fan base and yada yada yada, right? Maybe 15%, let's say, because if it's completely uncertain, we put 30, 40,
Yeah.
and if it's something in the middle, maybe 15. Yeah.
Okay, so then we can see something interesting, but not that surprising, is that we would assume that it would be a bit overvalued, and we can see what we proposed like more than half a year ago. Where we said that so the valuation has increased since we enclosed a target buy price of 85%. Let's see if when we put things similar to our old valuation, what that would do.
Well, we also put, let's say, the DCF to 5 years only.
So then we don't see a big increase there. So it's even more inflated than when we checked it out this time.
Yeah, I mean, this one is, as a company, is also getting a little bit into the political territory as well, because Warren Buffett holds the majority of it. Imagine what's going to happen if Warren Buffett is going to say, yeah, it's a little bit too expensive for me, I'm going to sell. That's going to be screwed up.
Yeah.
Because how many people are sitting in Apple, in the US and like in Europe and elsewhere? That's going to be like a big short squeeze. No, not even short squeeze. It's just going to be like a fall, just in a. You don't even wanna see it, really.
No.
So it's even like too big to fail from the perspective of like just these big institutions holding the stock. So that's also what makes the trouble. So I don't know, maybe something is gonna happen to Mr. Buffett, and he's like, I've lived for quite a while. Let me just chill, just enjoy my life now. I'm gonna just wrap it up with Apple. I don't know. Nah, but just to me, I held Apple for quite some time, but that was, I think, right after COVID ended, and I think that was when the war in Ukraine started, so when everything went down. So I just made like, I don't know, maybe 30% of it and stuff, and I was just like, to me it was too expensive, I'll just bounce. But again, as with that Fear and Greed index, with the smart money index, not my business.
Not touching that.
Yeah, no.
So I have another question. Would you rather have another Maxima, or do you want to have the La Chouffe?
No, rather wait, but which one did you? I got 3 Maxi. Because one is.
Yeah.
What do you want? I don't mind any. You can have a choice because you finished earlier.
I would like to go with this one.
Go ahead.
Alright. So yeah, if you're interested in what we're drinking, where's the fucking opener?
The opener here.
Thank you. So this is Belgian beer La Chouffe.
Oh yeah, so. But you know that you should, the way how you should actually pour the beer? Is you should have like the maximum amount of foam as possible. Because
Exactly.
otherwise it's gonna stay
I was
in your
about
body.
to tell you, like, don't give me any shade on how to pour beer. I know this shit, man.
No,
I am
of
a
course, of course
connoisseur.
you know, yeah.
No, exactly. So, out of like context for finance, the reason why you want to have like yay foam on your beer is because you want to get the carbonation going. Because you know that sometimes when you're drinking beer straight from a bottle, you're getting bloated, and it's because the carbonation can't go anywhere. So it's gonna do this effect, but then in your stomach, basically. When you're getting beer from so how it's called, like a tap, like draft beer, then the rule is 2 fingers. The thing is, like, this goes into beer, right? So the foam will become beer, and they're still in here.
Yep.
With draft beer, you say 2 fingers because you want to have the most out of your draft beer, and it works differently. Either way, just pour vigorously. It doesn't matter how much fucking foam you're getting. It's becoming beer anyways. And also it also works with wine, works with coffee. The more air you're giving your beverage, the better it's gonna taste. So you're also allowing, when you pour vigorously, you're also allowing those bubbles to mingle with air, which also brings out more flavor. Beers and stocks, or stocks and beer. There you go.
You see, that's the second part of it, huh?
Exactly. Yeah.
Yeah, I just realized like you're way more professional beer drinker than I am. So
It's
you even got the app, right? You even got that app.
I don't want to talk about it.
No, you don't want to talk
I
about
don't
it? How many
talk
beers do you have in there? I'm just curious.
So for me, like the reason, not the only reason, I like to try different things. So my motto personally is try something new every day.
Yeah.
That's my how you say it.
Motto?
Yeah, motto, but there's a like mantra. Like your mantra, it's like try something new every day.
Yeah.
Can be something very small as, for example, if you normally walk, you take, for example, a right and a left again from your work to your home, do it the opposite way. And then if you take a bus, for example, say something different to the bus driver. It can be very different, but you get some other experiences. And for me, how I also incorporated this with beers, and I just keep track with Untapped, and it's a very known beer brand, and if they would have any public trading stock, I would buy it immediately. It doesn't matter what the valuation is. So now in 448 different beers.
Well, it's almost anniversary, a 500th anniversary.
Yeah, I've been doing this for 4 years.
Jesus Christ.
So, but the thing is, I go into like, I was a student until like last year, so intake was different than it is now. And what I used to do is I would go to the Albertijn, or like local supermarket chain or Jumbo, and choose the beer. And I still do that. I choose the beer that I didn't have yet, and then I can scan it and taste it, and then see whatever I like. Options are running out at this point.
Yeah, but you also still have like what you have African, right? You have like the Middle East. Middle East. But I'm not sure. They don't really have a lot of beers actually. But Eastern Europe as well, right? In Eastern Europe, like in Czech, they got very good beers.
I know.
Yeah.
So yeah. Either way, yeah, it's a good hobby to have.
Yeah, apart from your body, your body doesn't really happy about it, but yeah.
So okay, let's see. Shall we do one more stock and then we can see what we want to do after?
Yeah.
So what have we listed in our title? We are saying Apple Vision Pro, Amazon, Google, Tesla, or Netflix. So we did Netflix.
We did Netflix, yes.
You can check it out. So we did it last week. You can check it out right now. And
this week, no?
We did this week.
Yeah,
after the earnings call. So we did it this week. You can check it out if you want. Basically, any other stock? Is there something you wanna? Is there something in the news lately that?
It's not in the news, but I really just like to check Amazon or Google because I had both of them at some point, but it's more like I was just curious, maybe just to jump back on them, let's say, because we were all the time like lagging behind like Microsoft and Apple and like Tesla and the big boys.
So who do you want to check out? Google
let's do AMZN.
AMZN. Okay, so check if there's any news lately of Papa Bezos doing anything rash.
To be honest, I've never heard of anything apart from like just them having like record sales for like Christmas and all of that stuff.
Yeah.
But no, to be honest, no. The only thing was that Twitch was saying that we're still not profitable. Twitch, right?
Yeah.
Because Twitch is part of Amazon and
I know,
stuff, so like their CEO was saying like, yeah, we're still, let's say, on the payroll from Amazon. And people were like, oh my god, is Twitch gonna get closed or shut down because we're not making money and yada yada yada, so.
top 5 AI growth stocks. Undervalued stocks.
To be honest, I didn't hear anything about Amazon recently.
Ten best, 19 best reusable water bottles. Thanks, Yahoo Finance.
On Amazon, well, there's the word Amazon in it, so.
Medium charge. So they didn't release their earnings yet.
It should be coming up soon. Probably. Yeah, you can go up. You can go up and check. I think it should say like down, up. Higher. Like this one to the right. You got the graph right with the dots.
Oh,
Right
there,
there?
yeah, but see, but
Does
they
it say
didn't
the date?
release it yet. No, it's Q3.
Okay. Anyways, anywho.
Yeah, no news.
No, it's okay. No news is also good news, huh?
Yeah, from a marketing point of view.
Yeah, dude, but that's your cup of coffee.
Okay. No news, but we'll check it out anyways.
Yep.
Amazon. So, what do they have? They have a 1.6 trillion market cap.
It's in the trillion club, so
Insane.
sounds good.
No dividends. Nothing wrong there. No dividend. Would expect. Gross margin profit is really high. Share buyback, they dilute you a little bit, but we'll check it out later. Revenue growth. Yeah, we could check it out. Either way, the revenue growth has been checked,
Yeah, it's good to see.
but no net income growth, no free cash flow growth. They can't pay off their long-term debt, and they have been diluting a little bit. So let's see what's going on. Shares outstanding. So over the past 5 years have increased, but they have been buying back shares.
Yeah, it's not that big of a deal,
No.
let's say. Yeah.
Negative free cash flow in 2021 and 2022.
Yeah, but that's the thing.
Interest.
Like what they're like trying to focus on is building that transportation infrastructure. So all the warehouses and all of that stuff. So the thing is, they were very big, and they're still very big in U.S. right?
Yeah.
So they're even outpacing, let's say, FedEx and UPS, and they're also doing the same story in Europe. So just trying to replicate the same business model. So like building a lot of warehouses and making the network around Europe. So this is also good to see. Let's say they are actually just conquering the world gradually, bit by bit, when it gets to, let's say, with the Amazon deliveries, like Bol.com, for example, right?
Yeah.
They're only, let's say, local in the Netherlands, but these guys just plan to do that like on a wider scale. So that's sounds good. Looks nice.
When we look at the long-term debt, so this is
Yeah.
probably when they acquired it when it was cheaper, right?
Yeah. Yep.
Okay.
But do they pay it out or no? No,
They have been
actually-
increasing it.
They've been increasing it. Okay.
Net earnings negative, so they had loss in 2022. Could be because of their market expansions. They have been present in Europe since 2020 something,
Yeah.
at least in NL. Interest expense ratio is nice, is where we want to see it. R&D is on the high side, but it's not major, right? It's like 30%. It's acceptable.
Yeah, but probably because of the AWS, right, and like the other, let's say, side projects of theirs. So if you take, let's say, the whole Amazon as a conglomerate, right, then then it kind of gets spread out around the business unit. So it's okay. It's okay.
For the SNG, yeah, also on the high side, more so than you would want. So, for example, in 2022, they pulled 2 times as much as selling and general expense as I would like to see in the stock that I own. Depreciation also high, but I believe they also have their own warehouses. They have stock of some kind. They are tech based. They have trucks. Whatever the fuck, it makes sense. Below 20%, still a bit on the high side, but acceptable. I'm positive free cash flow per share over 5 years, but the last 2 years have not been pretty on them.
Yep.
They have not been growing their free cash flow, but that's a bit odd because only 2021 is where
which
they
is a big
didn't.
fluke on 21,
yeah.
yeah.
They have been growing their revenue consistently, even though it's been slowing down, and for their what's this, like net earnings growth.
Yep.
It's just a bit of a mixed bag. It's like it's nothing to get really excited
It's a lot
about.
of expenses. That's the
Yeah.
thing. They're doing a good job in terms of like growing the business, but it's also accompanied with a lot of expenses. So it's not, let's say, like if Amex would have to, let's say, expand to another country, and the only thing we would have to do is like maybe some software, like changes, or like, let's say, maybe adding up some servers locally, maybe just to support the infrastructure, whatever, like asset light expansion. No, in here you need to build a house, or you need to put a product, you need to have a transportation and people and yada yada yada. So.
Yep.
Dividend
growth here is non-existent. They don't have it. It's fine. Something I don't mind at all. Look, either way, even if they pay a dividend, right? So, for example, with Amex increasing dividend is fine. It's still gonna go off of their regular share price in the end.
Depends. Sometimes it does, right? When you got that dividend. What was it? Dividend date, like when they actually pay it out to you, then usually you would get the decrease in the stock, but that's not often. Like for example, with an N, that was sometimes happening, sometimes no. So it really depends. Really depends. But let's say the rule of thumb is you're correct.
Yeah.
It would usually decrease.
Van Smith rule.
Let me check. Again, so it's good to see that return on invested capital or like capital employed is positive apart from 2022 in higher 20s, mid higher 20s. That's good stuff. Gross profit margin is also around 40% good, but then operating profit margin is 0 or like in the low side just because of the expenses. So let's put it like that. If they get their expenses in order, or at least if they would make their expansion gradual, like for example, if you know the company called Costco, so they are very, let's say, they're not so fast when it gets to expansion. So they still are able to keep their, let's say, financials intact while growing and then expanding, let's say, to different countries. I think they're even in China nowadays. They have actually quite some good, demand. So these guys are just trying to be like speedy fast, that's the thing. It's okay, but it's just like a bet on your ability to convert that money into like cold-blooded cash in the end of the day. So and then cash conversion, again, that's the same story. So you just have to spend a lot of money on it, and then they are not really able to convert it into just your investments are not able to be converted into cash that quickly. Let's say just because, you need to set it up in another country, it's going to take time to establish your presence. Well, the marketing part of things, better. So, and the interest coverage, it's just, having enough money in the bank just to pay out your debts. Sometimes it's good, sometimes it's bad, but I wouldn't really expect Amazon having troubles with that in the long run. Something like that.
Okay, so let's see what Amazon's doing for growth when it comes to analysts.
Is it
87% per year for the next 5 years?
Sounds great, but is it? But dude, it's also said for the current year it's 1,000%.
Crazy.
It's
wouldn't take that advice.
No.
You want to check it out?
No.
So if there's another way of checking this, how we normally do is, so we go to Amazon in stock analysis. You know best. How does it go? So we have the operating cash flow.
Yeah, you just go to the free cash flow growth. You just highlight the whole thing for the past 10 years.
All right, so that's the this room,
Yep.
and then we remove this.
It's getting hard, huh?
Jesus, like why is it not? Let me just copy this.
No, it's okay. Yeah, it will work, yeah.
112% per year on average. That's still crazy.
But the big fluke are, let's say, these 2 years, right? So if I would, for example, I would just remove these as in terms of they are just, let's say, big anomalies.
And then also 200%.
Yeah, this is just too big, huh?
Yeah.
We'll have about 13%.
And
so
that's
if we check, let's
even
say,
that would be nice if you
yes, but then it's also, let's say, the question is about, you can for this exercise you can either use the revenue growth or the cash flow growth, right? So in terms of revenue growth, they're doing good, so about 20%, right? If we assume that the company is actually going to get, let's say, profitable and it's going to start generating cash, 10% per year sounds good already, I would say.
if you would take the average, so it's 13% for free cash flow growth,
Yeah,
22% for revenue growth.
yeah.
You would get something like 35%, so 17% growth.
You do not, no, that's not how the math works. No,
But
no,
that's
no.
how we calculate it. It's beers.
You can-
It's stocks and beer.
Yeah, yeah, yeah. No. Now I get it. No, but put it like 12%. That's alright.
Right.
That's fine.
You also,
The
As a-
B's are usually low.
as a viewer, either live or later, you can also see how our stock valuations are getting more creative as we go.
Especially as the beer talks, and
As the
especially if nobody's watching us anymore.
exactly. Either way, so then 12%. So we look at the PE ratio of Amazon. Amazon. Did he use Amazon in Russia for Microsoft?
No, we don't have it actually. No. But then again, for what?
Just for chats.
For what?
For chatting.
Chatting. Amazon for chatting.
No, not not Amazon, but like MSN. Microsoft.
MSN.
Microsoft
Ah,
Messenger.
MSN, the financial thing.
Microsoft Messenger.
I've never heard about it.
Okay.
What the fuck is that?
Never mind. You didn't have it.
No.
No.
What? I didn't even know. I know MSN. MSN is like the financials thingy of Microsoft.
Yeah, but that's just they used to be the Microsoft Messenger.
Jesus Christ.
Okay. A low of 0.
Maybe fire. A high of what? Okay, you just put something in the middle. What's in the middle? Usually.
Like 120. What? Wait, 1 second.
Yeah.
Okay,
no,
what on a regular day?
Yes, let's put it like a regular day.
74, 100.
Let's do it 25 and 100. Yeah.
125.
Yeah.
Oh boy, it doesn't look pretty at all. So again, required return, rate of return.
but that doesn't matter. You see, because the majority of the things are about the free cash flow,
Mhm.
right? So that's the thing. So that's why you would get, let's say, the average valuation of like $30, right? Which is nonsense. But it's just because of the fact that if you just go to the free cash flow, it's negative. So I think what's also something what we are gonna implement is this, like, let's say, the feature where you can also choose the starting point for your free cash flow. So it's either gonna be, let's say, what it was for the past year, right? For what's the most recent number, or let's say you can just write it out yourself.
Yep.
So for example, if you believe that, let's say, Amazon next year is going to be already like at 0 or it's going to be profitable when it gets to free cash flow, fine, you can just put it in and then you can just base your calculations on that. and you're definitely gonna get completely different numbers.
Yeah.
So it's also just about, again, just understanding, let's say, the formulas, the numbers behind it, and then just doing the right calculations. Because if you see here, that's definitely some bullcrap going on, right? But now at least you understand why the bullcrap is there, just because of the fact that their free cash flow for the past year is negative.
Yeah.
So.
True. But yeah, still, even if you would only consider the calculation without any free cash flow interference, it's still not on the side where you want it to be.
I'm not sure. Because it's tricky because is it a good business? Yes. Is it able, let's say, to quickly also adapt in the local environments? Like, for example, even the Netherlands, right? So Amazon got into the Netherlands more or less recently, maybe a year ago, right?
Mm-hmm.
And you got, let's say, the biggest presence is by the local bol.com, right? So this is like the Amazon but Dutch, yeah, just for people who are not in the Netherlands. But you still can just buy stuff from Amazon, right? And you do not really have a lot of switching costs, do you? So if there's no stuff on ball.
So no, but for me,
Yeah.
I have the Prime.
Okay.
So for me, there is a switching cost, because even though on ball, like from 50 euros and 25 bucks, 15 bucks, I don't know, I get free shipping from ball.
Yeah.
But then I always know from Amazon it's gonna come in tomorrow, and they delivered it themselves.
Yeah.
So it's gonna come in tomorrow.
Still better, huh?
And
Still better.
that's the thing. Like, you can also have this subscription for ball, but it just depends on what you want to pay for.
But then I mean, like, if you are, let's say, I do not have Prime, right? But I can use both. So if there's no stuff on ball, I can always just check it out on Amazon. I don't care where it comes from, as long as I just get the product.
Exactly.
So that's quite a benefit for Amazon in terms of like expanding it further. And when it gets, let's say, to AWS, I don't care where you are. AWS is the best. It's the biggest one. Let's say if you need any of these cloud, let's say, solutions, you would either have Google, Azure. Both of them are mediocre, so to speak. I work with Azure on a daily basis, and I cry even sometimes mentally, so AWS is the best, and in there you would have these kind of, let's say, monopoly like Apple would do, and then it's a tricky question. If they would just get their financials in order, it's a buy all the way. Business wise and stuff. But yeah, it's just like a little bit iffy with the numbers, with the expenses rather. Yeah.
Right. So what I'm feeling is that we have been going on for 2 hours.
2 hours, yeah. Let's wrap it up.
I want to ask a question.
Yeah.
So which one did you like the most? Which beer?
Oof. To be honest, I had all of them apart from that Maximality. No, I haven't.
Yeah, I have the Maxim. You had the Maxim. That was your second beer.
Yeah.
You had the Brand IPA.
Yes.
Then you had Maximaltje, and then you had the was it the Trip Carmelite?
Yeah, Carmelite. I think because I had all of them apart from Maximaltje. Maximaltje is like just like a chill blonde. But I think out of all of them, Carmelite I like the best because it's like kicking, but it's also sweet. All of it was the sweeter side, so that's my let's see, more like a favorite if you wanna like get funky rather quickly. So yeah, and you?
I think same. Yeah, La Chouffe is also going like really nice at this point, but maybe because I'm already tipsy.
Yeah.
After the Carmelite.
Makes sense. Yeah. Because you started out kind of heavy, the wall kind of project, like in a random order. So we kind of got a little bit of hardcore right away. Yeah.
Okay, so no one stuck it out to the end.
No, but that's okay. I'm curious, who is that one person? Is it my phone?
No, it's me.
Is it you?
It's just.
Yeah, fuck.
Either way, if you're watching this,
which is not the case.
No, but like, dude, if you're watching this like in the future, right? If you're rewatching this, you can always subscribe to our channel.
Please.
Go to our Spotify.
Spotify.
Follow us on Spotify.
Spotify.
Yeah.
Spotify. Why Spotify?
It's there now.
Ah, yeah. Oh, you look at that guy. Okay.
Yeah, you can follow us on Spotify if you wanna, have chill finance talks with two tipsy dudes
Yeah,
at the end.
with some beer and it's just fun and giggles. Yeah.
Then I'm gonna say, you can always look up our fucking product.
Be professional, fuck's sake. I know you.
We are not trying to push this down your throat, but we're just saying, like, if you want us to continue. No, we'll continue anyways.
We will continue regardless, but if you just want it, if it's something which you like, feel free. It's like, what is it, €1, right?
For now.
Yeah, well, for now, exactly.
So if you're lucky.
Yes.
You have seen us working with the sheet, and if you're thinking to yourself, damn, that already looks nice, and it's gonna get better, then you might as well invest $1 into it. You go to get access today, 930.com, as you see here, 930.com. And there you go, the 930 spreadsheet. It's as easy as 1, 2, 3. Pay with PayPal, pay with your credit card. Best thing is, you're always guaranteed. So even though, if we would be scammers, you will get your cash back, and it's $1.
Yeah,
so
it's not a lot of damage for you guys.
There's no risk involved, and so that's also the reason. So the reason why we put this as $1 is, of course, we want to grow this community. And we also said, okay, we're gonna put it $15, and we're only gonna increase it when fucking inflation goes above.
No. Let's put it like that. So the basic pricing policy is that we just want, just because of the fact that we want the tool to be accessible and too easy to use for an average Joe, which is us, which is you guys, we're gonna also keep the pricing very cheap, because you will be able to afford this. Because if you want to get, let's say, any other subscriptions or whatever to similar tools, it's gonna be way more expensive for you guys. So that's why it's cheap. That's why it's affordable. That's why we're trying to make it easy. If you would like, for example, to have additional features or whatever, like for example, having increased number of, let's say, stock markets available, right? Or for example, increased range of years, right? For example, in this case, we would maybe just increase the pricing, because this would be also a bit harder for us to pull out. But let's say, as Costco does, you're gonna have your hot dog for $2 or whatever forever. Whenever you're gonna go to Costco or to whatever, it's gonna be the same price all the time. We don't give a crap. That's a policy. Yeah. That's
so
it.
For us, it's more important because we also started out not knowing everything, and we still don't know Czech.
No.
We know more than last year. No, but we have some kind of understanding, and we feel like that the pricing that we do, and even when it's going to be full price in a bit, it's going to be fair, and it's going to be payable for everyone. Like some subscription is going to tell you, like, okay, it's going to be you save 1 coffee every day. Fuck that. Like if you skip on a coffee 12 times during a whole year, you can have the fucking subscription.
And even imagine, for example, if you buy an overpriced stock, let's say, I don't know, Boeing, right? Boeing costs, what was that, $200 per share? And imagine if you would have a loss on that, let's say, position if you did not do your due diligence, right? You would save $200 if you would just check it with our tool. That's just a simple idea. And then that applies to all kind of ideas you would have in terms of investment.
Yeah. But in the end, so our tool will be only as useful as your strategy is.
Yes.
So if your strategy is, okay, I know this business, I understand how our tool works, and we're gonna work on explaining more about that later. Yep. But we are willing to tell you anything. Like, you can do all these calculations by yourself. You can make your own fucking spreadsheet. That's all fine. But as long as you understand what's being calculated, where the price is coming from, you understand that. You understand some kind of the industry, and you're not buying any hype. You're buying on value. You're already gonna do good because you have the system. And of course, the system is not waterproof because there are many factors going into the market. Like if you would do any like kind of regression analysis on like the stock market, there are a lot of factors, wars, politics, economics, whatever the fuck. But you have some kind of idea of what it should be worth in the ballpark, and then you can make your decision on it. And I think with that said, it's a wrap. Thank you for being here, Kirill, as always. And I'll see you next week for the video.
For another drinking session.
If you like the content, even though this is 5 years from now, you're fucking 930 has a gazillion followers.
That would be great, yeah.
You can let us know, because like we are also interested in your story in this regard. We've been replying to all comments, even though it's not been that many, but our also vision is to be inclusive in that regard, to be helping others out. And of course, like I said, we are not experts. Like, we understand some mechanics, but if you have another opinion, then always feel free to share with us.
Yeah.
We like to have your opinion, and then we can always sell whenever your opinion makes sense. Just kidding. No, but it's just the whole ecosystem that we have going on. We will still make content every week, and then we will try to squeeze one of these podcasts in.
From time to time, yeah.
Exactly.
Yeah, exactly.
And if you have any beers to recommend,
yes,
I'm open. You can find me on Untapped. My name is Robin de Waal with double B, and of course recommend me any beer that I didn't check in yet, and I will be happy. And I will give you a shout out personally, even if you're 1 gazillion subscribers. If you recommend me a beer that I can get in my local store, I will shout you out for sure. For now, it doesn't make anything. Like for now, like this promise is just dog shit because like we have like 14 subscribers. Like,
but all
we had one. We had like.
You're breathtaking. Where you? You're breathtaking. Okay.
So let me get you this promise. If you see this video like 2 years from now and we have some kind of success, and with some kind of success I mean 1,000 subscribers at max.
That's a target.
That's a target. And you recommend a beer, and the beer I didn't have yet, and then you're gonna get a shout out. Even if we have 1 trillion subscribers, even if the whole planet Earth subscribes to us, I will fucking shout you out for sure. For sure. That's a promise. And I am willing to keep that promise every streaming episode. I will make a PO box and you can send us beers.
I mean, we got the separate email, so we can do it. We can even make a beer at 930.com. Yeah, that's good. Yeah.
Cheers. Yeah. Anyway, that's enough bullshit for today. We're quite tipsy, and we're gonna end it here. Anyway, thank you for watching, if you did now or in the future or never. And yeah, we'll see you next time. And then you have to fucking stop recording.